FirstRand reported a 27% increase in interim headline earnings per share to 132 cents. This as the group recorded good top-line growth and profitability from all three of its franchises. Earlier today, Samantha caught up with the company's CEO Sizwe Nxasana for FirstRand for more insight.
There was a growth of 2 million customers, not just in South Africa as well as some of the other markets in which F&B operates for the period up to December, which is very pleasing. And certainly the strategy of migrating customers to electronic channels is paying off quite nicely. We saw the transaction volumes grow by 20%, which is very strong. And we saw, the activity in terms of, people transacting across the board increase as well as customers having more products with F&B. So the cross-sell ratio is now, somewhere around 1.8, 1.9 products per customer, which is very good, especially in the context of a growing customer base. To be able to grow the number of products that, each customer has is actually quite pleasing.
Looking at, total advances up by 9%, if you look at the credit card advances, 14% growth there, and that, of course, a contrast to residential mortgages where it's been 2% growth. If you look at home loans specifically, pretty much flat, 1% growth. So why the discrepancy there, and why is the residential market seeing still such lackluster growth?
Well, the residential market is still suffering from the strains that actually started in 2008, 2009, where a lot of the customers, found themselves in a situation where they can't afford to service their installments. The banks themselves, we have tightened up on our credit granting, procedures across the board. There's still a surplus stock which is sitting in the non-performing loans book, and all that, doesn't bode well for the growth in the mortgage lending market. However, in the low end of the market, we still continue to see some, activity there, as well as in the upper end of the market. However, the middle income market, which is by far the largest, is still going to take a while. I would assume, another year or so before we start to see more stronger increases in growth in advances there. However, if you look at the credit card environment or even other areas such as unsecured lending, they continue to grow, even though unsecured lending is starting to slow down. In fact, we started last year already tightening up on our credit scores. So we're starting to see some slowdown in that environment as well.
That brings me, of course, to the unsecured lending space, because F&B has about 4.6 billion rand in unsecured loans. That excludes cards, and then Westbank, 2.6 billion rand. So how much bigger do you want that to get as a part of your overall portfolio of assets?
Well, if you look at the total unsecured lending portfolio in our book, it's now about 17 billion out of 563 billion. And the slowdown is quite noticeable, at this point. So I don't think at this point, considering that the duration and the tenure of that book is relatively short, about 18 months or so, I don't think we're going to see significant growth in that book, going forward. So as a percentage of the total advances, it's not going to move much beyond where it is today.
Looking at impairments and talking about asset quality, impairments were up by 24% to 2.25 billion rand. F&B alone increased provisions by 37%. And you've also set aside 575 million rand, as you call it, credit impairment overlays, as a result of the fact that you see this being the end of the benign credit cycle, as you talk about it. So what is your outlook now going forward for bad debts in the context where you're a little bit concerned about the environment, about the consumer, and of course, do you feel like you've adequately provided for that?
We have adequately provided. You recall that in the reporting period to June 2012, we created an 800 million overlay. So that's 575 million rand that you just spoke about is in addition to the overlay that we already created at the full year of last year. And therefore, it's in anticipation of a tightening credit environment. Customers out there continue to find it difficult to service their loans. Even though the non-performing loans are coming down, the impairments of bad debts are starting to tick up. And that's an indication just how tough the economic environment continues to be.
You've recently got a license to operate in Nigeria as a fully fledged investment banking operation. You paid $100 million for that. You've been there for a few years already. So tell us about what your vision now is for Nigeria. How long will it take you to be fully set up, and how long will it take you to really start seeing good earnings emanating from that part of the world?
Well, we take a very long-term view, and we take a long-term view about our investment strategy in Nigeria. We've started with an investment bank. We have a number of transactions and deals in the pipeline, which are quite strong already in various sectors, including power or infrastructure and so on. And you know, we're already set up, even though we didn't have physical presence on the ground, we're quite active on a suitcase banking basis in that country. We'll continue to look for opportunities in the retail and commercial banking space in Nigeria. And of course, you know, we are participating in the AMCON process there, and we continue to look at other opportunities to invest in Nigeria, because it's quite an important country, and we see growth prospects continue to drive growth in the region, in the West African region, for many, many years to come.
Are you looking to potentially buy one of those nationalized banks?
Yes, we have expressed an interest to participate in that process.
Any update on when you could have further communication on that?
Well, it's a process that's ongoing. You know, it is driven by asset management company itself, so we continue to stay very close to it.
At the same time, you're still awaiting a final approval to buy Merchant Bank of Ghana. So is that likely to come through, and how will that platform enhance your presence in West Africa?
It will certainly enhance our presence in the retail and commercial banking space, because Merchant Bank of Ghana is a retail bank in that environment. And we are already doing a number of deals on the investment banking side, even though we don't have a physical presence on the ground. Again, in various sectors, power, you know, agriculture, infrastructure, real estate. So we're quite active in Ghana as we speak.
On the continent as a whole, I mean, is growth in the retail offering that you have going to be mainly driven by acquisitions, given the fact, and are there enough banks that are out there, small-scale banks, that you see an opportunity to bring into the FirstRand stable?
FirstRand is a business that's largely focused on maintaining high levels of ROEs, and therefore our preference is always to start organic businesses. So we're busy growing the businesses that we started organically in Mozambique, Zambia, Tanzania. We have a rep office in Kenya, and those businesses are doing quite well. And we'll continue to grow them, you know, using a combination of innovations, digital platforms on the retail and commercial banking side, as well as rolling out physical infrastructure, whilst we're also embedding our investment banking offering in those countries. And you know, they're quite important in that regard. India is another interesting investment, you know, destination for us. Our investment banking operation, even though it started off a low base, is actually doing quite well now. And we started during the course of last year to participate and play in the retail and commercial banking space in India. And that's also starting to look, you know, rather positive in terms of, you know, where we are and what we anticipated versus what we see in that market, especially, you know, considering where we operate, which is, you know, sort of in the Mumbai state or the Maharashtra state.
Just coming back to South Africa, of course, the ad campaign caused a lot of controversy. FNB, did you lose any government business as a result of the You Can Help campaign?
No, we didn't lose any government business. And in fact, you know, the help campaign itself was supported by all stakeholders. So that campaign continues because it's quite important for us as a country to help one another. And it's all about what FNB stands for, which is about how can we help you.
So government relations are fine now?
No, government relations were always fine. You know, government relations were always fine. I think one needs to distinguish between government and the ANC. And, you know, there were obviously concerns in as far as certain clips, not the advert itself. There were clips that people are concerned about, which in fact had been removed quite expeditiously.
That was Sizwe Nxasana, who's the CEO of FirstRand.